With everyone else here, great to have you. As always, my bright investor friends, family, community, confidants. Great to see you again. Lovely Wednesday evening, and have some. First off, I'll start with an announcement. Bright Investor is being updated as we speak. Yes, brand new version going live right now. So by the end of the night, clear your cache, refresh. You have the brand new version going live. You'll have access. You'll get the email next day or two about with all the different patch notes and release notes and everything going live. So make sure you check it out. A lot of stuff that we've been talking about is finally going out after a long time. Oh, a lot of fun stuff going on over and over again to keep getting more improvements on the platform. So make sure you check it out with the new version. All right. And we're already actually working on the next version too. Like, geez, I got so much stuff coming out to you guys. I've got 24, I got 27 more upgrades coming out soon. Man, looking forward to this. But regardless, a lot of things coming out tonight. So again, new version drops tonight. Make sure you check it out. I'll do another announcement. BrightInvestor Diamond. We've seen a lot of really cool interest in this. Only have a couple spots left now in BrightInvestor Diamond. They're gonna get some more emails about it over the next couple of weeks as we make sure that everybody who wants to be able to talk about it, learn more about what it looks like, gets a chance to talk with me. If you're interested in learning more about BrightInvestor Diamond, how it can help you, I am putting my link down in the chat right now. And it is an opportunity to just basically to get a one-on-one phone call with me and see if it makes sense for what you are looking to do. So I'll put that in the chat right now. Basically, it's a 30-minute one-on-one with me. We'll talk a little bit more about what you're looking for and see if BrightInvestor Diamond makes sense for you and where you're trying to go in 2025. Some one-on-one support. So feel free to check out that link, book a time with me in the next couple of days, and we'll make sure that we get connected. Outside of that, want to go ahead and announce a couple events that are coming. For those of you in Michael Zuber's One Rental at a Time community, we are doing a webinar tomorrow night. For those in Diego Corzo's Financial Freedom community, we're doing a webinar on the 27th. And for those of you following Soli Cariano and the Out-of-State Investor Academy, or now Hello Rentals, or the Lattes and Leases Instagram page, we are doing another webinar with her. And the topics for these three webinars, I am excited. We are doing the top 2025 hotspots, looking at not only great markets, but how to identify those emerging and gentrifying areas inside of those markets. So I'll be looking at some strategies there and giving you some of my top picks. So you'll see some emails about those different webinars coming out. You want to make sure you get in attendance, make sure you add those to your calendar and check them out. But without further ado, I think I've announced everything I want to do with the new version coming out right now, tonight. BrightInvestor Diamond consult call. That link is in the chat below to see if it makes sense for you. And a couple webinars coming out. Go ahead and I will open the floor up for questions, comments, concerns, deals, markets, feature requests. And before we even hear from the man, Chester, we added your filter. Now filter by stories. It's live. Check it out tonight. The new
Really?
version's being right now. Did that for you, buddy. So go check it out.
Awesome. Okay. Oh, ironically, I would happen to be on my phone on here, so I'm not at my desktop right now. So
That's
I'll go check this out afterwards then.
no problem. Yeah. So I want to let you know about that. And the whole, like I said, the whole email with everything new will come out in the next day or two with all the different, bullets, everything that's going on. So you guys will see that. But I want to let you know about that.
Definitely good stuff, man. Very good stuff. Um,
Absolutely.
I don't have any deals to take a look at tonight. Unfortunately, I literally have been working all day. We had a bunch of stuff happen at the job where whole bunch of leadership like decided, hey, greener pastures, whatnot. So been doing a lot of cleaning up of budgets and whatnot. So have not had a chance to really look at anything like I wanted to. So literally, yeah, it's what 9:06. I don't know where everybody else is, but yeah. I literally got finished working about 5, 10 minutes ago. So
Wow.
yeah,
Wow, brother. Well, thank you for being here. I hope everything goes better at work here soon. Seriously, feels like you got a lot on your plate right now.
yeah. It's kind of come and go. Like a lot of like senior leaders, like when they usually do leave, it usually is either right after the end of the year, so early January, or like when they have their bonuses. So that's like July time frame. So, you know, only a
Mm,
couple times a year, but it is what it is. Comes with the territory, I guess.
absolutely. I hear that. I hear that. Well, we're here for you, man. Anything I can do, let me know.
All right.
All right. Everyone else, if there are any deals, questions, markets, anything you guys have on your plates, please feel free to unmute, or I'll go person by person again. I have no problem calling people out. Jason, I called you out last time, so I'll give you a break this time unless you have something on your mind, and I'll hop over to Mike and say, Mike, how you doing today, man? Now we wait for someone to fumble with the unmute button. This is always my favorite part. They weren't expecting. Hi, can BrightInvestor compare multiple cities? Yes, so we had the compare market feature. If you may have been around for that component with the compare market feature. We played with that for about 8 months, and there's still some iteration we want to do with it. We have removed it from the live version of the platform. If that's something that you want on, knowing that it's in beta, it's not working exactly how I want it to, you can send us an email and we can turn it on for you. So if you can shoot me an email, or you actually, what's better is shoot this person an email, drew@brightmester.com, saying you want the market comparison feature turned on for you, and we can do that. Outside of that, if you were wanting to compare multiple markets, the easiest way to do that is to look up a city and say, looking at appreciation, type in appreciation, and then create a layer for that, and then go to another city and open up a layer for that, and you can compare multiple cities at the same time. Does that help answer your question? Yeah, you got it. Happy to help. We got a lot of we definitely get requests like that here and there. So, happy to help out where we can. Let's see, who else can I pick on? Picking on folks.
Well, I
Dolores,
can
hello,
go.
Polina, how you doing?
Hi, I'm good. How are you?
I am good, good. How you been?
I'm been doing well. Thanks.
Absolutely. Still working on that property.
Yes.
How's it going so far? How's the closing process going?
It's been fine. Uh-huh. So one of the insurance companies told me that they had run into a problem that I forgot the word that they use right now. There had been a problem with insurance. They had a problem in the house, I guess, in the house, and there was a very high payment on it from 2022. So they told me,
Okay.
oh, we may not be able to insure you. And I
Hmm.
talked to other insurance companies, and they told me, oh, it's no problem. They told me at some point they told me they needed a clue report.
Okay.
But then when I talked
Okay.
to a different insurance company, they told me, no, it's okay. We will insure you. And whatever happened in the property in the past is basically we don't care.
Okay. So likely there was a large, they use the word claim. Is that what they're talking about? Like a large claim in the
Yes, it
property?
was like, yeah, exactly. It was
Okay.
like 72,000 the claim on 2022.
72,000
Yes.
for what?
It doesn't say. It's just
Okay.
weather damage. Yeah.
Weather dam. Okay, wait, where is this property?
In Dayton, Ohio.
Interesting. Okay. Yeah, so generally speaking, in the real estate world, right, we occasionally get things called loss runs, right? Now, loss runs are essentially the financial document insurance companies use to track what basically is happening from a insurance capacity. So, like when I do commercial buildings, I will ask a property owner for a copy of their loss runs, which is simply, have you filed any major claims against this property that I need to know about? So the fact that some of those insurers weren't willing to insure you, basically due to past claims, it does make sense. Some of them have a lower risk profile. The fact that others are willing to kind of bypass those claims also makes sense because each company, depending on size and location of property, will have different risk tolerances. I mean, for me personally, I would want to know what that $72,000 claim was for, if only so you can budget that into your CapEx. For example, if that was for an entire roof replacement, it'd be really nice to know if the entire roof is new. That's one less thing you have to worry about.
Mm.
If that was for, windows and siding work or foundational repair, it'd be nice to know, where what that money went to. And
Right.
ideally, I'd love to see some kind of documentation on where was the money spent, was there an inspection done, so that you don't walk into a property buying blind. So whenever there's large claims like that, it does make sense there'd be some issues with some insurance companies, depending on who you're working with. But I would highly recommend finding out what you can and what was done to the property, just so you have some peace of mind moving forward.
Yes, I try, but it is the grandkids selling the property of the grandmother.
Oh,
And
so they don't have everything. Basically, they're
no,
like, we
yeah,
have no idea. Okay.
right, exactly.
Okay. Well, generally then whoever inspector that you hire should be able to identify if anything's been recently replaced. So whether it be a roof, siding, foundational repairs, a good general inspector should be able to quickly identify, if something is, you said 2022. So if something was brand new as of 2 years ago or 3 years ago, they should be able to identify that and point it out to you.
Yeah, I did not get anything. I know the roof is somewhat new, but from the inspector, I know that, but he doesn't know from when.
Really? Was it flood? Was it flood damage? Trying to think
I,
for or fire. Was it fire? Because the
no, I
property
don't
had
think so. No, it doesn't look like it. It looks, the property looks very well taken care of.
well, then weather damage has to either be wind, snow, ice, tornado, lightning, but you'd see that on the roof and you'd see that potentially in broken windows. That's really interesting. Geez, that's a really interesting situation. My curiosity is running on what that could look like for a $72,000 claim. Keep me posted on this.
Sure.
And how it goes, because that's an interesting scenario. But as long as the inspector has done their inspection and they've told you that there's no outstanding issues that you should be wary of, then maybe it's something we'll just never know. But wait, is the grandma still alive or has grandma passed away?
She's in a facility, so I'm not sure
Okay,
how well she's doing.
sure. So she's not in control of what's going on. The kids are taking care of that. Okay, all right. Well, I'm just gonna be super curious now moving forward. But overall, sorry you had to go through some insurance hoops there, but overall it makes sense for the situation with the claim that we're seeing there.
Okay. Yeah, it's my first time, so hearing this, so.
Yeah, not a
But
problem. So
it
hey,
was
that's
all,
why we're
I
here.
just got scared for a moment. I'm like, oh, but yeah,
Not at
everything
all.
else seems well, and I am not because the appraisal got delayed a bit. They didn't order it right away. Everything got delayed a little bit, but I can just sign remotely per se, for because I
Perfect.
won't be able to go. So far everything is
Okay.
going to plan.
Well, I mean, that's exactly why we have office hours, right? To come in, have questions answered, and have any freak out moments, so we can go ahead and take care of them together. Um,
Uh,
so I'm glad we're able to move forward there, and I'm excited to see when you close.
uh-huh.
Especially because it's a property we looked at together with BrightInvestor. So of course I want to see this thing close for you. And so yeah, I'm looking forward to seeing it move forward. And of course, keep bringing your questions here. Every Wednesday and Saturday. Of course, we're here for you.
Sure, thank you. I actually have a couple questions for you. One
Sure.
has to do with the platform, and the other one is a
Okay.
deal. So on the platform, I have been looking for properties, and then sometimes I don't get comps. So is there
Okay.
a way that I could add comps to it?
Yeah. So what kind of property are you looking for? Single family or multifamily?
So in this case was a multifamily.
Okay. And yeah, so multifamily comps get a little hard to work on, specifically because it sucks. I don't know why, but a lot of realtors and MLSs don't actually list the accurate number of beds, baths, or square footage for multifamily. They just leave it blank. So when we're pulling comps, if without bedroom or bathroom information, we kind of have to guess on what's the right comp there. So with the update that's going out right now on the system, we are adding the ability to edit the sales comp section. I
Okay.
think that includes the ability to add your own. I'm not 100% sure. If it doesn't, if it's not on there, I will add that for you because that's
Okay.
absolutely something we can do for you.
Awesome.
But that might actually be happening, like be coming to the platform right now. So I may have preemptively answered that one. But I will take
Fantastic.
that. I will take that note because I think actually my co-founder Drew's in here, right? Oh yeah, he's in here, so I can go ahead and check that out.
Uh-huh.
And what was your second question?
And then this is a seller finance deal. I have I guess how would you go about that? I have a hard time looking at this kind of situations. I haven't done it yet.
Sure. Okay. So
And I
seller finance, what terms have you suggested or have you projected to the seller?
so I just asked for the information and they sent me a bunch of they already have everything set up. So I haven't looked at it, done the but I guess not exactly sure how to approach it. I can send you can I put it on the chat, the information? Is
Yeah, take a look at it. It might be something that would be better for you and I to handle kind of one-on-one and kind
okay.
of dive more into that specific situation so we can go, into the depths of whatever deal you're looking at and what those terms look like. So happy to go ahead and do that with you. Actually, if you want to, I put that link in the chat. This is exactly what Bright Investor Diamond is built for. If you want to book, use that link and grab a 30-minute time with me. We can talk a little bit more there about what makes sense for your deal and talk about, how we can keep getting you support.
Okay, sure. Thank you.
You got it.
And yeah, and one last thing,
Yeah.
if you could, sorry, I don't want to take all
No,
the time.
you're fine. You're
Um,
fine. You're fine. This is why I do this, right? It's just an hour of time to help answer questions. You're good.
so when I'm looking at comps or when I'm looking,
Hmm.
is it, um, let's say I'm looking at the rents or the sales, and the map, when I scroll down, when I have a lot of comps, the map moves up. So when I'm
Okay.
scrolling, if it makes sense.
When you're scrolling and that moves up. Like, okay, oh, the small map to the right of the sales comps table.
Yes, exactly. Everything.
Okay, and when you're
When
just
I'm
saying it's
looking at the different comps, sometimes I
mm,
have gotten a lot of comps, so I have to keep scrolling down, and then
mhm.
every that whole section moves up with the little map on the
Hmm.
right.
Okay, interesting. I will take that note down and tell the team.
Mm-hmm.
And also, one like because the new version is literally being pushed to you guys right now.
Okay.
Um, check it, refresh your system tonight. Let me know if
Yeah.
that's still happening because there's like 30 upgrades going out right now. And if it is, we could talk about it on the 30-minute session that you book. And if we need to get push to fix for that, we will.
Okay. Awesome. Thank you. And that's it for me.
All righty.
Thanks.
Always a pleasure. Yeah, of course. Well, let's see here. Uh, we got lots of note takers in here as well. Dolores, I know you're still working on your flip and your potential build development project plus rehab plus a couple other things. Any news on that one? I know you were going to go out there and take a look at it.
Yeah, I went and looked at it on Monday, and walked the lot, and the front property, the foundation looks really solid, so it's really just, you know,
Right.
I do need to get a new roof, and, do the inside. So, that I think would be a fairly easy flip process.
Okay.
But it's really just trying to figure out, and that now, like, my focus is trying to figure out what to do with the back part of the property is, you know,
Hmm.
do I try to wholesale it, or do I try to, build on it? Do I keep it at, that full 10,000 square foot, or do I, you know, break it apart
Hmm.
into, three separate parcels. So I think it's really right now just trying to run the numbers and figuring out what is going to make the most sense,
Sure.
financial perspective. So that's where I'm at now. But yeah, the property's in a really great area. I looked at the houses across the street, easy beach access. So it's, yeah, just trying to figure out what I want to do with it and then come in with the right offer.
Okay. Can I give you my opinion on it?
Of course you can.
Heck yeah. Nothing that we folks in America love like unsolicited opinion given. Can't wait. All right. So when it comes to wholesaling, especially the fact that you're going to be, if you were to one off, first off, I think splitting the parcels makes the most sense for
Mhm,
sure. As a definitely, no matter what happens, that seems to make the most sense there.
mhm,
Um, Second off, if I'm a wholesaler, if I'm an end buyer, and I know that you are currently renovating the front property and you're trying to wholesale off the back lots, all that goes through my mind is having to manage driveway access, your crew versus my crew at the same time. And I plus the fact that I don't know what kind of person you are and who you're going to be as my neighbor when it comes to doing these projects that kind of simultaneously. So from a wholesale perspective, I would be most interested post the renovation of that property. If you have just flipped that, or then we talked about last week, burring out of that front property, if you had
mhm,
just split the parcels in the back and you could say, hey, I just bird slash flip this property for this cost for
mhm.
this ARV, here's the profit. Now you can go do this two more times in the back. That's a much more enticing wholesale offer than let's make sure that your crew and my crew don't steal each other's axe tools or whatever at the same time. That's my initial reaction that
And
either
I
you take.
wouldn't be
Go
able
ahead.
to wholesale the back until, because it takes at least 4 months for the
Yep.
CPR to take place. So I wouldn't be able to sell those parcels in the back. And during those 4 months, the plan is to fix up that property in the front and either do a burr
Okay.
or to flip it. So it's just going to depend on, right, the numbers and, what I could get for it, and the financing and everything, for that. But yes, I wouldn't be able to put the property on, MLS or anything until really the front one gets done, because it's about the same amount of time to fix it up as to the CPR process. So we're talking, 4 or 5 months anyway.
Okay. So for me, I mean, that makes a really compelling argument. If you can point to a property or project you did on virtually the same lot and look at
Hmm.
here's what the costs were and renovations were, I think
Hmm.
that does position you quite attractively for a wholesale situation, which I love that exit strategy. Because now we talked about the refining out of the front one last time, and
Right.
then we as an exit strategy for the first or a potential flip. And then now as potentially developing the back two or now wholesaling the back two. I love that now you have, I think, two really strong exit strats for both sides.
Right.
So part of me, a lot of people talk about return on investment. And guys, you're gonna hear me quote something else. I'd like to also talk about ROE, return
Hmm.
on energy.
Hmm.
If you do this front flip and you're like, oh my gosh, that was like as easy as I thought it was gonna be, it went really smooth, and you feel like I have the energy to do two more and the ROI and the ROE makes sense, I think you pull the trigger on getting that development done.
Hmm.
But if this first flip is like, wow, that was way harder than I expected it to be, you know, I think I'm ready to just go ahead and, keep my burr here and, let someone else take onto it. I think that's a decision you can make, halfway through your renovation process.
Right.
I would, right now, we know no matter what, you're going to be splitting it. So I don't think that exit strategy necessarily is something that we have to concern ourselves too much until we get a little bit further down the line, assuming that you buy the property with the exit strategy in mind of whatever is going to net you the least, and then offer based off that.
Okay.
So whether you go the flip route, so whether you go the development route, which will ultimately net you more, or the wholesale route, the wholesale route will likely net you less. Will very likely net you less. But we do, so that means that we need to be making an offer based on the assessment that you are going to wholesale it on the back end. So
Right.
Factoring out that loss of profit. And
Yeah.
assuming that keeps you competitive, that guarantees that you're keeping two exit strategies going into it. Versus if you buy the property with the expectation of an extra, I'm gonna pull this number out, $300,000 in net profit on the sale, and now you can't wholesale it, and the first front project was an absolute nightmare, and you're looking at it like, I have another 18 months to go to renovate to build these properties. That's not going to make for a happy Dolores.
Yes, absolutely. Yeah.
So that would be my suggestion, my insights when it comes to the offer and the exit strategy for that particular property.
Yeah, I love that. Thank you.
Absolutely. Unsolicited advice, guys, for the win. Can I get a heck yeah in the chat? Love it. Love it. All right. Let's see if I have not heard from anyone. Jason, my man, I appreciate it. I appreciate it. Love to help, guys. This is what office hours is always meant to be. I know we've only been doing them for about 4 months now. But I hope you guys have gotten a lot of value out of these, just being able to, get help with BrightInvestor deals, strategies. The whole goal is just to help you guys as much as possible and, give me a place to go give my opinions twice a week where people want to listen. So it's been, I hope it's getting an equal exchange of value here. So I'm having a good time. Let's see, any other questions I can answer or any other comments, talking points that I can help support. For those who joined a little bit late, reminder, we'll be sending out emails on the new version that comes out tonight. We'll send out an email on BrightInvestor Diamond. If you want to have a 30-minute with me, talk more about if it makes sense for you, that link is in the chat below. You can book that. And then the 3 webinars we're hosting over the next 3 weeks about top areas, finding those hot spots inside of a hot market, doing some deal analysis. Those emails will be going out to you guys as well, so you can check for those and make sure you get the invite there. But I'll go ahead and keep it open here and ask if there are any other questions that I can go ahead and answer while we're here. Before I do a quick, let's see here. I don't know if they're still in this meeting or not. I don't think so. Okay. All right. Besides that, I can go ahead and tell you guys about a property I'm about to offer on, which is really cool. If you guys want to learn about it, actually, I'll let you guys decide here.
It's always
Yeah.
good.
Yeah,
I've got two.
sure.
Perfect. I've got 2 properties. Do you guys want to hear about the commercial property or the residential property? They're very different.
Commercial.
You guys
Commercial, because
Commercial?
I'm about to put an offer on one and I don't know much about him.
Okay, commercial. Jason, we should talk if you're taking offers on commercial. I'm gonna throw a flag on the play right there. I have a link right there. Book a time with me right now if you're making offers on commercial.
It's
I'm not
Add
making
that link
possible.
again. I don't see it in
Yeah.
the chat.
Oh yeah, absolutely. Yes. I'll put this right here.
a commercial, but I'm getting a 30-year fixed on it, so it's not. It's a 6-unit building.
Okay, that's great. That's great. Let's talk. Have you ever bought a commercial property before?
No,
Okay, Jason, that link is there. I'm requiring you to use it.
I will.
Requiring you to use it.
I will for
Great.
sure.
I will hunt you down. Gonna give me a freaking heart attack over here. I'm buying commercial. Have you bought one before? No. I love it. I love the mentality. Go for it. But we're gonna get you set up best that I can.
It's
Where
called
is it,
Ready,
Jason?
Fire, Aim.
Yeah, absolutely. I love it though. I love it. How I got started. So let's talk about the commercial one. So this is a project that I'm pretty pumped on. I'm getting pretty close to making my offer on it. It's a 200 unit building in San Antonio, Texas, that was built in 2014, 2014 vintage product. They want $27 million for it, and I'm probably going to offer pretty dang close to that number. So when it comes to commercial real estate and the projects that I'm looking at on that side, the reason I like this property is, one, I know the owner is in a very particular situation. So during 2020, 2021, not news to you guys, right? Interest rates were low. A lot of commercial multifamily operators scaled very quickly. The owner of this building happened to go from 14,000 units to 27,000 units in less than 18 months. Now, I don't have to tell you guys that buying 13 in less than 18 months is a lot. And one of the projects was I kid you not, they bought a 3,000 unit, $500 million portfolio for one of their transactions. So pretty big overall when it comes to what they're trying to do. Now, that operator, unfortunately, is losing everything. They are just not doing great. There are many articles written about them. I won't name them here, but it's not hard to find. And they are selling properties off that are bad performers. And then on the other side of the equation, there are properties like this one, which are strong performers that are great assets that they have to sell at a basis that lets them get some equity out to go put out some fires elsewhere. And I got the call about this one. So I'm looking at this property. It's in South San Antonio. And if you guys recall, I have the other 200 unit in North San Antonio. So this would be my 200 unit in South San Antonio, which would be awesome. And basically how we're underwriting this property is looking at it from a very creative structure. So I'm going to lay this out for you. When it comes to commercial real estate, right, returns are based off something called, in part, IRR. Now, do you guys know what IRR is from a foundational, what kind of metric that is when it comes to returns, or what it stands for, IRR? No?
Internal
No.
rate of return.
Yeah, Chester, nailed it as always. So IRR is internal rate of return, and it's different than AAR, of average annual return. So think about it like this. The higher the IRR on a property, the faster you're getting more of your money back. Basically, IRR is a function of time. So if Chester comes to me and says, hey, Donato, I'll double your money in 1 year, and Jason comes to me and says, Donato, I'll double your money in 6 months, Jason's deal has the higher IRR because they get my money back faster. Now it gets more complicated if Chester says, well, I'll triple your money in 1 year, and Jason says, or I'll double your money in 9 months, which has the higher IRR. That's basically what I have to model out. And so basically, the way that you can make your IRR better is to give your investors more of their money back faster. The other way you can make your IRR better is taking less money from investors. So right now, in this model, what I'm doing is saying, look, the market for where this property is at is a good one. But the ability for me to raise rents right now isn't as strong as it may have been 3 years ago. So if I go spend $1 million renovating the units, I'm not going to get a return. But I will have raised all this money from investors, and I'm not getting enough of an ROI on it. And because I'm not putting that money to work, I'm causing my property to have a lower IRR. Basically, it's a worse deal. So instead, I am modeling this property as if I'm not going to do anything to it for 4 years. Nothing. Then in year 4, I take out short-term debt. And then in year 4, renovate a bunch of the properties. Then take out a second refinance to pay off that short-term debt, allowing me to renovate the units at a time when the market is more responsive. I avoid having to raise more capital up front for the deal, and I can raise the IRR for the deal. So it's doing a renovation, but delaying it so that I'm able to have a better deal overall and work with the market. I'm going to pause right there. that your guys' minds get blown. And I'll answer questions about that because that was a lot of technical components kind of back to back there. But I'm gonna pause for a second. I'll answer questions. Or if you're like, Donato, that was super easy. I get it. Like, come on, keep going. You can tell me that too. I don't want to go too far too fast.
Just trying to absorb everything. So, trying to think back to the original details, just kind of listening to everything else.
Yeah.
So it's in San Antonio, 200 unit. What I forgot. What'd you say was the were you putting a down payment?
Yep. Be about 30%.
Okay.
So give or take 7.5 million.
Okay. Gotcha. And then in terms of the, I guess, general area, like, did
Mhm.
you, as part of like running the numbers, figure out, or did the current owner give you like, I guess, the vacancy? Because I'm guessing for like 200 units, I mean, that should be pretty easy. It's like, if it was like 5 or 6% vacancy, it's either 10 or 12 units or something like that. Pretty straightforward numbers. But is that something you also looked at?
Yep. Look at vacancy. I haven't done this before in a BrightInvestor office hours. I'm not sure if I'll do it again. But do you guys want to see what my model looks like for a commercial property? Like how I run numbers on a large multifamily project?
Yeah,
Yeah.
that'd be
I have
awesome.
I have one yes, a couple yeses. Yes, yes, yeah, okay.
Yeah, even though I'm not looking at commercial, I mean, this might be something like, you know, maybe years down the line looking at.
Sure.
So this would be cool.
Yeah, I mean, I gave you guys the option to ask residential or commercial. You guys picked commercial, so I'll you got to give the people what they want. So before I share this with you, obviously, it's going to be complex, so don't freak out. It's just numbers, and when I do work with people one on one for commercial real estate, so this is different than BrightInvestor Diamond. BrightInvestor Diamond is for residential primarily. It can be it's primarily meant for residential. When I work with people one on one for commercial, this is what we talk about. So this is a model that I use for commercial multifamily. This is an actual live model of an actual live deal that I was working on today, which is actually, I think, pretty cool. So you can see I have growth rates, percentage growth for vacancy, loss to lease, concessions, bad debt, taxes. I'm doing 10-year projections on my expenses for every door. I've got lenders coming in. I'm factoring future cash flows against different other incomes for up to 10 years in the future. And I'm going to bounce around a lot here, so hopefully don't just get dizzy. I've got debt quotes from lenders in place. I've got CapEx items they've spent money on, tax assessments, insurance estimates, contracts of the property that are currently in place that I get to review. I've got full analysis on their rent roll, over here looking at every single unit they've ever leased, how much they're leasing for, as well as an entire 12-month history of every dollar they spent on the property and modeling that up or down. So, what does this mean? There's a really big fancy Excel spreadsheet that takes a lot of data, all the different moving parts of commercial, and puts it into something that I can read. So, absorb. Chester, go ahead.
Yeah, one of the things I was thinking about was what would the insurance look like for something like that? Like thinking now and then, you know, sort of the latest and greatest that I'm hearing in terms of insurance, like based on what's been going on out in Pacific Palisades and the areas in and around LA, it sounds like a lot of insurers are going to
Yep.
jack up rates even higher. So I'm generally curious, how does insurance work for commercial, and then would that potentially affect your insurance premium for a 200 unit building like this on a year to year basis, or is it like, do you get to lock in your coverage for a longer period of time?
Yeah. So if you know a big name commercial multifamily investor, if you just happen to know any of them, they've all had insurance problems last couple of years. Just that's a fact. So like, for example, this property, right? They're going to give me insurance at a rate of, well, in multifamily, we look at everything as a per door expense. So if you guys are like, I'm spending, like if oh, Chester's got, you guys have a 4 unit and you're spending, you know, $5,000 a year on maintenance, you would take $5,000 divided by, four for your 4 units, which would be about $1,200. You'd say, oh, I'm spending $1,200 per door for maintenance. So that's how we talk about it in commercial multifamily. Insurance is the same thing. So I am paying $844 per insurance, which is about $170,000 a year on this property. That will go up and go down every year. I'll lock it in for 1 year terms. And usually it's going to go up by 3 to 5% year over year. Sometimes I get lucky and it goes down by 10%, which is great. But insurance premiums really had their big spike about a year and a half ago. And depending on what market you're in, a lot of those insurers have kind of baked in those losses. So that's why it is really critical, like Houston and some parts of Southern Florida, California, right? There are some markets like where the hurricanes came through in Carolinas. You can bet your butt that anytime someone wants to get insurance over there right now, it's going to be a lot more expensive. So it's a whole thing with commercial. Not easy, but it's how it works.
Gotcha. Okay. And then I see on that first line where it's got general liability and then a $5 million umbrella. Are those two um usually I guess I've trained myself to kind of think of like umbrella policies being different in terms of coming from a different insurance provider. Is this uh total coverage coming from the same insurance provider, meaning the general liability and the $5 million umbrella?
So that quote is from one of my insurance brokers. So essentially, they'll go out to the insurance market and compete to get us the best rate.
Okay.
Once we're officially under contract. So that's what that will look like. So there's a lot of moving parts. Jason, with your commercial deal, you can get ready for us to work on that together. Hope you're excited, buddy.
I am.
Yeah.
It's a lot simpler than yours.
Most people's are. That's fine. And I didn't build that one, to be clear. One of my colleagues built that. He spent literally 9,900 hours building it. Literally. People talk about 10,000 hours to master something. He did that. So that's what I learned how to use. I love it. It's my favorite. It can be, modeled a bunch of different ways, but we'll spend some time talking about that. I can also show you guys the residential property I'm looking at. This is a fourplex in St. Louis. I'm actually really pumped about this one. This is a fourplex in St. Louis that's about 3 blocks away from my current fourplex. And it's awesome because 3 of the 4 units were being rented as midterm rental. And the seller used to house hack the property and is now moving away and is investing somewhere else. And they don't want to deal with the furniture, which means the 4 units come with 3 units worth of furnishings. We're talking art, tables, beds, bed frames, chairs, all over it, completely included in the sale.
Nice.
All right, Kenny, you got a good deal on it then, Donato.
Sorry, what was that?
I said, tell me you got a good deal on it, man.
We'll see. Oh my, this is great timing. Wow, that's perfect timing. My agent just texted me to say he just went under contract.
That is awesome.
Wow.
Congratulations. That's great.
Congratulations.
Wow, that's dope.
Congratulations.
That is
There you
awesome.
go.
Nice.
There it is. Well, that's fun. Good timing, guys. So we'll see what happens. So, yeah, it's a cool property. I like it, and it's right in my realm of. I told you guys I like to buy at 65K a door in St. Louis with rents over $1,000. Right now, the in-place rents are as high as like 950, and they're selling it for $62,500 per door, which is why I'm interested. So, pretty cool to be able to say, hey, this is exactly what I look for. And at this point in my buy box, right, I know when it comes to commercial, when it comes to residential, I know what I want. I know what I want. And if I see it, I make an offer. If I don't see it, I don't make an offer. And that's pretty much critical at this point, is being able to know exactly what it is on the numbers wise. So even if I was going to a different market like Ohio or, Texas or what have you for residential, I already know. I don't care where you are, man. I'm going to be buying at 65 a door with pro forma rents of over 1,000. So I can basically repeat that strategy because I know those numbers work out wherever I go. So fun night in the BI community.
Yeah.
Enjoyable. So we'll see what happens. Now we gotta go make stuff happen, and I think that's part of my kind of methodology for being here, guys. Is that even though me and the team are building BrightInvestor to help support real estate investors, the goal is to keep doing real estate, and so I feel like I kind of have to keep doing real estate. And I'm going to keep buying real estate to kind of justify, like, put my money where my mouth is. Like I'm using BrightInvestor to find, analyze, and do these deals. So I got to keep making offers, got to keep doing it and buy more stuff. So I'm right there with you. I'm always in the trenches. Make it happen.
Yeah, man. That's what Zuber or Michael Zuber, we just call him Zuber, nickname it. He calls it doing the work. So, gotta keep doing the work, man. It's good stuff.
Absolutely. Absolutely. We'll make it happen.
And
well, guys. Oh, yeah. What do you got?
I was gonna ask for Jason, do you as long as you're comfortable with sharing the numbers, I don't know whether you're under contract on that 6 unit. Do you mind if we take a look at it?
No, I'd love to. Show me everything I'm doing wrong. Do you recommend anybody for commercial insurance? Because I just tried getting steadily, and apparently they don't insure that kind of stuff.
Yeah, I do. I can send you some information on it. When we do it. I saw you booked your one-on-one. We'll go ahead and I'll give you some insurance brokers there.
Thank you.
Absolutely. And where is this one in Florida?
No, Chicago.
Okay. There you go. In Chicago. Okay. That'll be cool. Yeah, run us through your numbers on it. What are your numbers?
It's going for sale for 415. It's a 6 unit, if I didn't already say that. The cash on cash return is basically 12%, well, 12.35%. The cash flow is 13, almost 14 a month. The only thing I'm not sure about, I know, is like I'm gonna be it has a boiler, so I'm gonna be my current property doesn't. So for this, I'm gonna be responsible for the water for it, for like the water and the gas to heat it, which I have no idea what that's gonna cost. Was really my only question, like that I'm unsure.
Okay. Well, was it listed for 415 or you're offering 415?
It's listed for 415.
What are you going to offer?
Maybe 400 to start. It to me already it seems like a really reasonable price. Which I don't know if that's because it's commercial and people don't want to touch it. I also did find out from talking to a different broker that there's 2 more garden apartments that are currently rented that are not legal, which I don't want nothing to do with. I haven't run the numbers to include those or anything like that. I ran my numbers strictly on the other ones. Oh, and it's 3 2-bedrooms and 3 single units.
Smart man. Okay. Well, first off, so hold on. What are the in-place rents on the property?
1,300 from what I heard. I ran them. They should be around 13, 15 for the 2 bedrooms, and 19. Say 12. I ran it at 1,000, but it should be around 1,200 for the single units.
I mean, at $400,000 on the offer, that's a 66 grand a unit. That is like right there with my rule of thumb. So right off the cuff, great. Second, if you're grossing already 1,000 plus per unit, great. That makes sense. That's a moneymaker. Love that. So I'm really like an acquisition in place rent component. Boilers are fun. They're not impossible. They're not as scary as people make them seem, but they do require some consistent maintenance, and they do require kind of a steady eye. One of the reasons people might be more hesitant on the commercial side is, commercial loans are entirely different. 4 units or higher. Sorry, once you hit 5 units, it is a commercial project, which means that the lending is completely different. People can't personally guarantee it. People can't personally qualify for those loans that they could like like a fourplex. So even though it's basically residential, that really changes your buying pool by a lot. So that could be one of the reasons why it's taking a longer time to sell. The water, sewer, and trash. Wait, are you paying water, sewer, trash, and gas, or just water and sewer? What bills are you in the hook for?
Water and sewer for sure, and trash. And I'm pretty sure I'm gonna have to pay for gas. According to this other realtor I talked to, who's actually looked at this, he says I'm gonna have to pay for the gas that's just responsible for the boiler. I don't know how that works, if it's a separate meter. I'm going to physically look at the property Friday.
Yeah. Okay, so you familiar with Rubs?
No.
Okay. Well, Rubs is Rubs is the ratio utility billing system. So what Rubs is designed to do is when you have older properties, whether it be residential or commercial, and you have a master meter. So something where like you have one master meter for water, you have one master gas meter, what have you, and it's not financially feasible for you to split off everyone's utilities individually. Rubs is a system you implement to say, okay, my gas bill was $1,000 this month. Based on everybody that had 2 bedrooms, you guys are all going to pay $200. Everybody that had a 1 bedroom, you're going to pay $100. And it's a system for basically splitting your utility costs against multiple units when there's not individual meters for every utility type. So Rubs is typically implemented in one of two ways: A, flat fee, or B, a ratio. And there's 1,000 different ways to do this. But one thing I think we could look into, because I'm personally am a little hesitant making this offer until we have a signed declaration from them on what their last 12 months of water and sewer and gas bills have been. I want to see that in writing. What we could potentially do is implement, instead of a rent bump on year one, you simply say, hey guys, rent's staying the same, but there's now this flat fee every month for utilities. So utilities cost you, or hey, every single month you're going to pay a percentage of this utility bill. Some to that component, whether that's $50, $60, $100, what have you. And so it's a way for you to come in and recoup some of that cost just in case, without necessarily having to do a rent bump and without having to install multiple meters. Now, the only reason that will ever bite you is when you get a leak somewhere and all of a sudden your water bill is super, super high. And your tenants are like, why am I paying this huge bill? Or, why my water bill is so high? So they'll let you know. If there's ever a leak and you have your ratio billing, trust me, your tenants will let you know when that there's a larger spike there. But that's something that we can do to kind of come back off those costs if we find out that that's going to kind of eat in your cash flow. But overall, I love that you underwrote it without those 2 units. Best thing we can do is make sure that those 2 units have nothing to do with the 6 you have, and that they're not going to impair or interfere with it whatsoever. Then once you're stabilized, so you can start that conversation of what does it look like to make these legal, or what does it look like to use these, or if it's you pay me cash in the back pocket, Jason will forget you're there for the next 10 years, whatever option you want to go for some extra cash flow. But overall, as a reminder, commercial properties are not valued like residential properties. It's all based off a function of the NOI. So what's super crazy is the fact that if you were buying a 4 unit, we could look at 10 other properties and decide what your property's worth. being a commercial is the most valuable component, is that you are control of the property's worth. You need to raise that property's revenue as high as physically possible and lower its expenses as low as physically possible to command the highest valuation. What's really cool about that is that you could potentially turn a massive profit on it depending on how quickly you do those things. There's no longer, you don't have a time component in here. You could potentially be in and out in a year if you wanted to. I know you want rentals, right? You're looking to, get into something for a
Cash
longer
flow,
period of time. But you will be in control of your property's valuation. And so it also means there's going to be a need for some more active management if and when you ever go to refi or sell. Because I'd love to see their financials on it. We'll talk about this in our 30-minute meeting, of course, I'm sure. To see if the 400,000 makes sense. Because from a residential perspective, it might. From a commercial perspective, it might not. So I'd love to get in there and make sure that we're getting in at the right basis based off this different model evaluation.
That makes perfect sense because, like I said, I don't know much about this at all. I know I didn't want to do it at an adjustable rate, so I did find a lender that'll give me 30 years fixed. Makes
Great,
me
because which is awesome because rates, when I knock on wood when I say this, hopefully won't get worse. Hopefully. So you're getting locked in like the worst time, which is pretty good because basically any improvement's a good refi opportunity for you, which is great. So all right. Got that link there. Guys, we'll go ahead and wrap it up there for the evening. Dolores, want to make sure that you got that link as well. Now you asked for it. You can see it there down in the chat.
Yes, thank you.
You got it. All right, guys. That is it for today. I will see you guys all on Saturday. If you'd like to be there for our next office hours, reminder, you'll see the new version being uploaded right now. You can refresh and clear your caches. You should see it coming out tonight. You'll get an email about it. You'll get some emails about some webinars upcoming. And of course, thanks for being here. I appreciate it. And we'll talk soon.
All righty. Thanks, Sonata. Thanks, everybody.
Thank you very much.
Thank
Everybody
you.
have a good night.
Bye-bye.
Have a
You
good
got it,
one.
guys.
Got it.
All right. Bye.